Nick Giretto from the Australian Banking Association. I look after all areas where technology meets banking, and unfortunately that includes both money laundering and scams. So yeah, I'll give you a sort of an overview of probably the last 3 or 4 years of the history of scam regulation in Australia, and importantly, the direction we're going around creating a ecosystem approach. So the story of scams in Australia, like in many countries, started to become a very big problem sort of at the beginning of the 20s. Through the COVID period, it really took off. But unlike a lot of countries, Australia has started, and we've had some ups and downs, to pull that number back a little bit, which is a good news result. Part of that is, or actually a big part of that is, from very early on, not only the banking sector, but importantly the government realized that dealing with scams actually required what we're calling an ecosystem approach. And that's really based on the very obvious insight that the way a scam proliferates involves multiple sectors of the economy, and scammers are absolutely brilliant at figuring out how to take advantage of all of the weaknesses within the individual sectors, but then importantly between the sectors. So what this slide says is no news. Scammers make contact through customers, via email, SMS, or digital platforms. They move the money from a bank account, sometimes through a bank, sometimes through crypto or other ways. But from a bank perspective, what's really important is by the time the instruction to move a customer's money has actually already been scammed. It's just the money hasn't yet moved. Sorry, just moving on. There we go. This number here is a little bit old now, but it's important in that when we analysed what was going on in the scam ecosystem in Australia, what we discovered was that there were multiple different channels by which customers were being contacted. And importantly, in Australia at least, more than half of the funds leaving bank accounts were going out through cryptocurrency channels. These numbers have changed a little bit. The proportion of phone calls has gone down a little bit. Unfortunately, the social media platform number has gone up a little bit in the last year or so. But what that led to was what was the beginning of what we're calling the ecosystem model. And importantly, industry and government worked together for 2 years now to start to address the challenge of scams. And a very important focus has been that this is the purpose of this effort is to stop scams from happening, not just to refund customers who have lost money. Making good victims of scams is important, and particularly where there's a clear failure of any of the organizations involved, then absolutely they should do that. But it's our view that the primary purpose of the intervention is actually to stop scams from happening. There are many other, simply compensating people doesn't stop the problem. For example, that money has left and is being used for further nefarious purposes. So we set about creating this whole of ecosystem approach. Probably a key part of that was established by the government, the National Anti-Scam Centre. It's been in operation just coming up for 2 years now. The most notable thing that the NASC, as we call it, has been doing has been so-called fusion cells or task forces, where the government convenes groups of people from across industry to address specific scam types and identify the types of solutions that might work. So we've had a number of those. Job scams was one, remote access scams is another, and so forth. The banking sector took its own actions, and we actually created what we call our Scam Safe Accord. So all banks in Australia, from the largest to the smallest, signed up to the same set of principles for customers around managing scams. Basically, this was a commitment from all of the banks to disrupt scams, to detect them when they're happening, and to respond appropriately when people do fall victim to a scam. Um, if you know anything at all about the structure of the banking market in Australia, some of our largest banks are very large. They have significant market share, 20% plus. The smallest are very small. They have only 50,000 customers. The actual way that the different types of banks apply these obligations is different and is tailored for the size of the bank, but every obligation in some form or other does apply to every bank. I won't go through all of these because I'm conscious we've only got a short period of time. One important one that I will call out was confirmation of payee. When we set out to build this, we thought we would be the third country in the world to do it. We've actually been overtaken by 2, so we will be 5th. But starting actually next month, Australia will roll out a nationwide confirmation of payee system. And importantly, access for new bank accounts all require biometric onboarding for verification. The other really important part of the approach we've taken in Australia is creating an intelligence sharing model. And the Australian Financial Crimes Exchange is the heart of that model. It's a private sector partnership. It was originally set up just by our largest 4 banks and now has more than 30 members, including the first telcos and even some pilots with some of the social media platforms. This is going to evolve further under the regulatory environment, but really importantly, it's allowing the sharing of scam signals that collectively allows much better detection of a potential scam and action on scams when they occur. So parts of that, the data exchange in the middle there is the heart. So this is sharing all sorts of information that could be relevant to a scam, including the beginnings now where the telcos will share, for example, if a customer has recently had a SIM swap. That information by itself is not material, but when a customer is also on the phone, doing a transaction, then it might be. So very quickly, the scam prevention framework is the regulatory structure Australia is moving to. The law passed in Australia in February, and importantly, banks, telcos, and digital platforms all have obligations to protect their customers, what we call same but different. So the obligations are similar, but are tailored for each of those sectors. And that's really the heart of where we're going. We would like to see a few other sectors added as well, but beginning fairly soon, the detail of all of this will start to roll out. That's a very quick view of what's been going on in Australia.